Kona Haque is head of agricultural research at Macquarie Bank. I'm pleased to say she joins me in the studio now. So if commodities are going to rebound, even in a difficult macroeconomic environment, shall we say, there's a great deal of concern out there about a slowdown in growth and how that's going to impact demand. So what then will drive commodity prices higher?
But we have to be selective on which commodities we think are going to rebound. We like to look at the fundamentals. And so basically, if you look at supply, demand, and which commodities in particular are very tight, we think corn and perhaps cocoa, and to a certain extent, maybe even natural rubber. These markets are actually very, very tight still, and even coffee. So what would happen that even once we have this macro sort of risk aversion, which is causing a lot of the funds to leave this asset class, we think fundamentals will reassert themselves. In particular, right now, for example, the US is looking to start, they're going to be harvesting in the next few months. We're worried that the crop's not going to be big enough to fulfill the demand needs. And then you could see stocks which are not covering for basic needs.
Yeah, and I'm curious about investor appetite for commodities like rubber, for example. It recently hit its lowest level in more than 3 months, didn't it? So, I mean, how do you see that playing out in the next few months?
No, absolutely. Rubber right now is suffering from the fact that with macroeconomic fears, there's worry that automotive demand is going to fall and therefore demand for tyres. However, we need to again look at the supply side. Natural rubber production is not rising as much as demand should be, and that's because it's restricted to countries such as Southeast Asia, Thailand, where essentially there have not been huge amounts of growth or in planting. It's a 7-year cycle by the time you plant to when it actually starts fruiting. So we're looking at least 2013-14 before you see a big increase in supply. Until then, I think what's going to happen is this sort of demand destruction, which is resulting from this macro fear, is going to keep prices abated. But once we see the lift off again, I think we're going to start seeing prices firming up again.
And what about demand in general coming from China, for example? Is that going to remain buoyant? Because I'm just reading something interesting here about passenger car sales in China falling for the first time in more than 2 years in the month of May. And of course, there have been concerns about inflation and overheating. So, I mean, how might lessening demand in the West and indeed also emerging economies like China impact these prices?
No, absolutely. This is a short-term fear, and prices are reflecting that. But like I mentioned before, it really is a question of once the dust settles and we start seeing the emerging markets in particular, the middle-income classes desiring more automotive and particularly replacement tyres. That's where the growth is. Once we start seeing that emerging, I think there could be a bit of a bottleneck in terms of supply growth.